Good having you, Michael. Thanks so much for joining in. The world seems to be a happy place right now. I mean, maybe there were concerns a month ago. Those seem to be out, or at least put under the carpet for the time being.
Well, I think what's happened is that the markets have had time to digest some of the news that came out of China over the summer. Our view was that some of that negative market reaction was a bit overdone. You know, we know that China's been slowing down for quite some time. That's not really a news story. I think some of the policy actions that were taken by the Chinese authorities obviously had a bit of a disturbing effect in terms of the way that the markets interpreted them. But I think overall our view is still of a steady managed decline in terms of GDP growth, and that, you know, China's credit fundamentals still remain fairly solid. So I think a lot of the market noise that we had over the last month or so, I think, you know, now we're starting to see perhaps a slightly more nuanced view coming out, and analysts, I think, are now waking up to the fact that there wasn't really anything very new in terms of the story around China.
What about, Michael, this turnaround that one is seeing in commodity prices, be it crude, which spiked up a good 6 to 7% all of last week, or for that matter, base metals as well as precious metals as well. Do you see a conclusive reversal of trend that began last week?
Well, I mean, our view has been that for the year as a whole, we're expecting Brent to average around about $55 a barrel. I think that, you know, we're pretty much on course for that for the year as a whole. Obviously, there has been some shakeout in terms of commodities markets, given the slight overreaction that I think there was in markets to the news coming out of China. Inevitably, with a slower rate of growth in China, you are looking at a softer commodities story. I think we've factored that in terms of our credit ratings. That's very much how we're looking at the credit picture for commodities exporters. But I think overall, you know, we expect a reasonably steady, or at least the price of commodities to stabilize, I think, going forward. There may be some volatility still in the short term, but I think in the long term, we are looking at a more stable picture on the commodities side.
So, Michael, for the moment, if given an option, let's say to you know, pick and choose between DM and EM, the good old comparison, what we've debated perhaps on every forum for the longest time, which way would you vote?
Well, I mean, I think there are issues in both developed markets and emerging markets, and within the emerging markets themselves, which are the ones that I'm best in a position to talk about, since my main responsibility is covering Asia Pacific. And I think our view is that particularly for the Asia credit outlook, it's still pretty robust. We see quite a lot of fundamental strengths across Asia, and that includes India, which to a large extent, I think, insulate this region from some of the other issues that are arising for emerging economies elsewhere in the world. So perhaps thinking in terms of Asia as a separate group or class from the emerging markets in general, I think starts to make a little bit more sense once you start looking at the stronger fundamentals.
Right, Michael, really appreciate your time and glad you could join us.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.